So today we are going to start with some different topics, but very much on the similar principles. We'll get on to the topic in terms of some of the important aspects therein, an overview about that, and then of course we'll move on to some of the questions around it. Right. So a couple of topics we have planned. So the first discussion we are planning to have around this due diligence investigation and forensic accounting. So this is effectively covered under one chapter. And the other part we are going to discuss will be about the audit of PSUs in terms of its overview. So PSU being a very specific sector and quite important because of the nature of companies you have, the size of the companies you have, and some of the specific compliance requirements which they have. Yeah, so it becomes important, uh, especially from the stat audit perspective, to have some specific considerations which are required to be additionally given, okay, over and above which you will generally have for various other types of entities. Okay, so these are the things we are planning to discuss today, right? So I'll now start my discussion with this first topic, which is about due diligence, investigation, and forensic accounting. Now, some of these terms you must be familiar with, particularly when we talk about due diligence. Okay, very commonly performed these days in respect of various requirements. Now, the important point to understand here is that when we actually cover some of these topics the way we are covering, means as a part of one chapter, so generally there tends to come up a discussion as to, do we have any similarity in these three topics, or if no, then what are the differences? Okay, because if you are discussing all of these three at one place, so what are the differences? Yeah, so both these aspects we'll try to discuss. Now, first of all, let's pick up this due diligence. Now, what is a due diligence? As the terminology also suggests, you can say it's all about doing an examination, sort of, or maybe reviewing something in a diligent manner. Yeah, so that's what you can just simply say. Now the question arises that what is it that you are going to review when it comes to the due diligence? Yes or no? And how is this due diligence actually different from the audit? Correct. So that could be another thought process, because when you talk about audit and on the top of it you have this terminology due diligence, then how are these two different, and why is this due diligence required at all? Okay. So we can say when we talk about due diligence, actually we are talking about a very specific process wherein we are going to investigate maybe a particular process which may have set of activities, which may have certain transactions or certain processes which are recorded in the books of accounts, or which are related to the operational matters, or which could be in relation to the compliances of an entity, and for which there is a very specific objective which has been set out. So unlike audit, which is a mandate for a company to be completed each year, for each financial year, we do not have that specific requirement when it comes to a diligence. Yeah, so it's not something that you will come across each year for a company. Now let's take an example first of all, and then we'll get into some of the technicalities around this due diligence as well. Let's suppose, in fact, let me just share a working file for this. Okay, so I'll just open this document now first. Okay, so here we go. Now, talking about this due diligence, first of all. Now, let's suppose for a company, there's a plan. What's the plan? The plan is maybe to buy another company. Okay, or maybe a person is looking to buy another company. Now, what is the company which is under the process of this sale? Say we are talking about a company ABC Limited, right? Now, for this company which is in the process of sale, now if let's suppose one were to acquire this company, so what do you go and check? So can we say that the buyer or maybe the prospective buyer will only look at the financial statements of the company? Answer is no. See, the financial statements of this company will definitely be looked at, will definitely be examined, in fact, thoroughly examined. But over and above, there are various other things which the buyer may be interested or maybe looking to check. Because financial statements will not tell each and everything about the operations of the company. Financial statements will not reflect the complete compliance requirements of a company. Yes or no? Now, if let's suppose the person wants to check in terms of the compliances of the company, specifically as to whether the company has been compliant in respect of various rules and regulations over the year. Okay, specifically on this part. Maybe that's the requirement of the buyer. Now, in such a case, what do you do? Yes or no? What do you do? And how do you go about it? So that's where we can say a special review. So it's a special procedure to check those compliances. Yeah. So this special procedure for the compliances of the company, or maybe to get into the taxation aspects of the company, wherein the reviewer, now who will do this review? There will be a reviewer, there will be a third party. Now it's not important as to who is going to be this reviewer. Of course, the reviewer has to be competent, who can just perform this job. But the important aspect is when we talk about compliances, when we talk about tax, or let's suppose it's only about the financial aspects, something that you call as financial due diligence. In all of these cases, the scoping is very specific to the person who is looking for this review, who is looking to get it done. Okay. It's not something which is very standardized, something that you see in case of statutory audit. Okay, wherein you will know each and everything that is required to be done. Of course, the procedures will be defined, and the procedures will also vary depending upon the nature of the entity, nature of the reviewer, process of the reviewer. But unlike that statutory audit, you do not have that situation in case of due diligence. So it's something which is meant for a very specified purpose. And generally, when do you see this? Generally, in respect of the acquisitions, these diligences are required to be done. Now, the scoping as around these diligences will not be only talking about the area to be reviewed. So this will generally be an in-depth review. Why? Because just think about a company, say ABC Limited, wherein the acquisition is going to be quite substantial. Say the acquisition cost is expected to be rupees 1,000 crore. Now, for the acquirer as well as the acquiree, this is a very substantial transaction. And for such type of specific and substantial transaction, the person will definitely be looking for an in-depth review. Yes or no? So it's not something which is going to be a high-level check or just an overview of the things. No. It will definitely be something which will require in-depth analysis. Correct. An in-depth analysis is required because over here, the idea is to acquire the entity, acquire the business, and then, of course, to run it. Okay. Or maybe the way this process will go on. But because the nature of transaction is such, that's why such type of reviews which are conducted for a very specific purpose happen to be quite detailed, quite in depth. Okay, so that's where you may have a due diligence. And even though we have talked about, we talked about some of these examples, say in respect of compliances, taxation, financial, it's not predefined always. It will always vary from person to person, entity to entity, as to what is the scope they are planning to have and to what extent they are planning to have that. Understood? So this is something that you will see in respect of due diligence. Correct? Now, how is it different from audit? I think we have already got the clarity that over here we are not limited to the books of accounts. We are not limited to the financial statements. Maybe a diligence is required to be done respect of the operations of the company, or maybe a very specific operation of the company, and which has actually nothing to do with the financial statements or maybe the financial aspects. Yeah. So that's why you can say two concepts are quite different. Of course, when you talk about financial diligence, it will involve the financial aspects, the financial statements, books of accounts. Some of these things will definitely be involved. But is it really limited to that? Answer is no. It may go beyond that. Okay. So that's how we can say this diligence is required to be defined. Right? Now, just give me a minute. I'll just go back. Document. Now, as we discussed, we can now look at this definition quickly. So due diligence is used to investigate and evaluate a business opportunity, or verify the agreements, or encumbrances on the assets, maybe the title ownership, maybe the intellectual property, health, safety, environmental laws, etc. Okay, it's not really limited to one aspect. It's a process of investigation which is performed by investors into the details of a potential investment. And as we discussed, it could be related to anything: examination of operations, say the management, verification of material facts, right? So in this case, now the next question arises: what could be the procedures? See, the procedures could be again various, and that will again be dependent on the underlying area, or maybe the underlying item which is required to be reviewed or tested. For example, it could be a set of inquiries. Okay. And does it remain limited to the inquiries? No. It can, of course, involve the verification of the documents, supporting documents. It may also involve analysis of various financial and non-financial data, right? So some of the analytical procedures that we talk about, so those things will also be involved here, right? So some of those aspects which we see in case of audit, you will find here. But is it really limited to the books of accounts? Answer is no. So that's why let's quickly try to get an understanding of how is it different from the audit. So audit is conducted in respect of books of accounts with an objective around what? With an objective to express an opinion. Yes or no? But as we discussed, diligence is for a very specific purpose, for examination of potential investment. And the objective is to confirm all material facts of the prospective business opportunity. Means anything which is there in relation to the acquisition doesn't get missed out. Yeah. So just think about it from the perspective of the buyer, acquirer, or the investor, because he is going to make such a significant investment. So that's why the investor would not only be looking at the aspect as to whether the information is correct or not. They would also like to have an understanding of that, plus whether that is completely presented or disclosed to the investor. So idea is also to find out if something is missing, if something has been hidden. So that's why, to a certain extent, you can say diligence will also have a, you can say, to a certain extent, similarity to what you see in case of investigation. But is it really the investigation? Answer is no. Of course, this is different from investigation also, right? Next. Now, I think importance of diligence is quite clear to us as to why do we have this diligence. Now, let's try to understand what are those areas which are generally considered by the investors for performing these procedures or for performing these type of reviews. Or you can also say that in a way we are talking about the types of diligences that we have. And we'll try to get an insight about all of these types of diligences now. Okay, now once again, what I'll do is I'll get on to that working file now. Okay, now so let's say we are talking about commercial or operational diligence. Now, in this case, what are we going to look at? So in this case, because it's all about the commercial operations of the entity, so that's why the focus of the reviewer will be around what? Operations of the entity. So let's read this. It's generally performed by the concerned acquirer enterprise, evolving an evaluation from commercial, strategic, and operational perspectives. Okay, why? Because the investor would want to know about the operations of the acquirer in detail. Maybe he is looking at operational efficiency, if at all something is possible in future, an evaluation of that. Or maybe the investor is also looking at the synergies, yeah, through this acquisition. Now, how will the investor get to know about it? Only and only when he will have an in-depth understanding about all of these aspects. Yes or no? Yeah. Now, in this case, what will the reviewer go and check? In this case, the focus of the reviewer will be completely around the operations. Okay. Of course, obtaining an understanding about it. Talking to the operations team, plant team, as to how various operations are carried out. If at all there are any glitches which need to be worked upon. Okay. Plus, if at all there are any improvement areas. Yeah. So what are those improvement areas? Of course, this will be very much in line with the glitches that are going to be observed basis the review, but something around it is always required to be considered. Now, similarly, if we were to take, say, another example, so we can say the next aspect could be around the tax due diligence. Now, what do we have in case of tax due diligence? So let's try to understand this. Now, as the terminology suggests, now in this case, what is the focus of the reviewer? Or maybe the person who is getting this diligence done? Taxation part completely. So this will require an evaluation of taxation. Okay, something which is applicable on the company. How the company is really handling this taxation part. Not only in terms of compliances, but in terms of availing some of the benefits. Let's suppose tax provides certain benefits which are available or which can be made available to the company. Okay, let's suppose there are some tax holidays which the company could have availed. Okay, so whether that has been covered by the company or whether that has been looked at by the company or can we say we still have a window of availing some of the tax benefits which are unexplored as yet in respect of this company. Yeah, possible. You don't know. Now, other than that, of course, reviewer would also like to ensure the compliance of tax laws. Whether the company has been compliant in this case or not. Well, the company has got some significant demands, some of the litigations which might be going on. How's the management? So how's the management evaluated that all this far? So something that has been considered as a contingent liability, for example, is that really a contingent liability, or should that be considered as a provision? Why? Because see, the management has considered a very aggressive stand. Yeah. So now in this case, the objective of the diligence is to do what? It's to evaluate the taxation part. Now, even though we are looking at it from the taxation part, it can also involve an involvement of indirect taxation. So as we discussed, it's not really limited to only the direct tax or maybe only some of these areas. These are only some of the examples, you can say types, for the purposes of our understanding. Correct? Now, what could be the next one? So these are very common. So something that we are also talking about are also found very commonly when it comes to the diligences. Of course, then you have this diligence around the information systems of the company, particularly the technology, some of the tools, and some of the IPs, etc., which might be available to the company as to how the company has been taking care of that. So these are also considered to be quite critical in relation to any company. Similarly, when you talk about legal due diligence, now in this case, what is going to be the consideration? Whether the company has been compliant in respect of various laws and regulations. Now again, you find this very common. Legal due diligence. Now, unlike taxation, when you talk about legal due diligence, over here we are not limited to, say, income tax. Over here we are talking about various laws and regulations which are applicable to the company. Yeah, because for a new acquirer, for a new investor, it's important to understand what are those possible gaps, okay, or what are those non-compliances which are quite serious on the part of the company, but which may not have been recorded, say, in the books of accounts. Why? Because some of these things may have been ignored by the entity. So that's why these things are important for a company to evaluate. And generally, when you see a due diligence, so now please remember that when it comes to any sort of due diligence, it's not that due diligence is always, you can say, initiator of this due diligence will always be the investor. May the acquiree wants to know about, has to know how do they stand, where do they stand, right? Because they are also going to be receiving an amount as against the sale which is going to take place. So if at all they want to get this evaluation done, so how do they do this? So they may also be looking at this due diligence. So at times you see that in respect of particular sale which is under consideration, acquiree and the acquirer, both of them may be getting the due diligence done, right? And then of course you have this next due diligence which is about the financial part. Again, a very common due diligence that you come across. Okay, now let me just give you one perspective, I think, through which some of these confusions around the diligence and the audit in terms of its difference will automatically get clear. So let's suppose for a company, for the financial year 25-26, statutory audit is already completed. Okay, statutory audit is already completed. This company already have an audited set of financial statements. And let's name this company as ABC Limited. Okay. Now, we may see that for the same period, 25-26, or maybe for the prior period as well, because when the diligence is performed, it's not really limited to a particular financial year. It may be carrying a larger period because very detailed evaluation is required to be performed. Okay, but for the purposes of just to differentiate, let's try to understand as to what is it that I'm just trying to help you understand here. That even though the financial statements of this company are already audited, what can you find that the investor, prospective investor, has still engaged a third party? Let's suppose PPP and company has been engaged for what? For due diligence of the books of accounts, of the financial information. Even though it's audited, still it is required. Now you may be thinking that, but why do you want to get it done? So there are a few reasons around it. Maybe the investor doesn't have the comfort over the management team of the company, of course, or maybe the auditors. So that could be one of the possibilities. Or maybe the approach which is required to be considered while looking at the financial information. The investor wants to focus more on the business evaluation. Okay. As to how profitable the business is, how profitable various business operations are through the financial information. Some of these aspects may not have been looked at in a similar manner, or you can say with the same approach by the statutory auditors. Because for a statutory auditor, would you look at, if you are the statutory auditor of a company, okay, so if the company is profitable, so now whether this company is able to generate 20% profits or not will not be a matter of your consideration. But for an investor, it could be a matter of consideration. Maybe the investor is looking at only the companies who are generating a significant return over a year. Okay. Yes or no? And basis this information, maybe the investor is also trying to evaluate as to how the future numbers are going to be stacked. Yeah. So how do you get to know about it? Only and only when you get on to some of these aspects. Correct. Yeah. This becomes a very, very important aspect because see, when it comes to the diligence, of course, various procedures are going to be common. But the moment you have a clarity in terms of the approach, you will be able to differentiate between the procedures. Right? Now, of course, as we discussed, this diligence may involve any sort of thing which is required to be covered. Just give me a minute. I'll just open this document again. Okay, so here we go. So the important part for us is what? To understand the approach, to understand the scoping. So similarly, we can have this consideration around the environmental aspects of the company. It could be about the HR function, okay, the policies and procedures which the organization might be having so far. Okay, maybe those are specifically required to be reviewed. And it's not necessary that this will always be performed for the purposes of investing in a company. Maybe the existing investor wants to evaluate a particular process. Yeah, to improve upon that. So that can also be the thought process. Right. Now, as around the detailed evaluation, various procedures that you perform, that will all be in relation to the underlying information, supporting documents around it, wherein you also go and check around what? Wherein you'll always go and check around what is the understanding of that particular process or the set of activities, what are the underlying uh, supporting documents that you'll have. And of course, then you'll go and check. You'll also be performing certain analytical procedures around it. So no. Now looking at the approach. So what do? You may be reviewing, reporting on the financials submitted by the target company. Now, this terminology target company, where do we use? We use this for the company which is under acquisition. Okay, which is a subject matter of sale, you can say acquiring company. Right? So that's why it's considered to be the target company. Okay. Now, how do you conduct? So of course, you'll engage a third party expert. You'll get into the process. You'll get into the understanding. And once the understanding is obtained, you'll plan the procedures around it as to what are the specific things you'll want to check, what are the areas you'll want to get into the detail on, what are the areas that you'll not like to focus more on. Okay, what are the areas over which you may be planning to perform only the say analysis or the analytical procedures, and what are the procedures over which you would want to perform a in-depth review. So generally, analysis of the financial and non-financial data forms part of these due diligences, particularly when you talk about the financial due diligence. Why? Because this will help the reviewer understand the overall picture. Okay. Some of those analysis he'll be able to do. He'll also be able to look at the complete picture. Yeah. He'll also be able to comprehend that information in a better manner then. But does it mean that it's limited to that? No. I'm saying as a starting point, this analytical is going to be very significantly involved as part of due diligence. Yeah. So to a great extent, you will see the application of this analytical piece when it comes to the due diligence. Right. Now, once this is wrapped up, of course, the third party expert who has been engaged will come up with the report. And here again, we do not have any statutory format of this report as such. It may again vary from the consultant to consultant, and again may vary depending on the needs of the person who is getting it done, in terms of the structure, in terms of the layout, in terms of the content, of course. But some of the very common things that you will generally come across, let's try to look at. See, because it's going to be an important set of information, particularly for the purposes of decision making. So that's why one element you will generally come across, not only in respect of due diligence, but for different types of reviews or the procedures which are performed around this. Whether you call it as due diligence, whether you call it as internal audit, something that we talked about in the last session. Similarly, when we talk about any sort of special purpose review, okay, or maybe any sort of analysis that you do. Maybe even if we talk about this investigation that we are going to touch upon now, this executive summary will generally be the first section that you start. Why? Because over here you are covering the entire part of the report. You can say this overall report in terms of the outcome which the consultant is going to have. So that will be covered here. Yeah, so somebody wants to just maybe go through in a broad manner and understand some of the key aspects around the business, around the company, with the help of this report. So he, she will be able to get that very easily just by looking at the executive summary. But of course, any such report, any such information is considered to be quite critical for the purposes of decision making. So that's why a person will generally not be limited to the executive summary, will always want to get into the details of the report as well. But this executive summary will definitely be giving a bird's eye view, right? Then, of course, you have this background of the target company, objective, terms of the reference, and the scope of verification, so that these are very clearly laid out what was required to be done. Then you will have this understanding about the company, then shareholding pattern. So that is, again, you can say in a way continuation about the organizational aspects, organization structure, then the observations, assessment of the management structure, financial liabilities, valuation of assets. Now, again, this is all dependent on the scoping which is there or which is involved. SWOT analysis. What are the strengths? What are the weaknesses? This is an important analysis. If at all there are some opportunities for the business, what are the threats which are involved in respect of this business? So again, for the purposes of decision making, the SWOT analysis is very important. And whenever we are talking about the diligence, so you will always see this element of the future projections, okay, future considerations, because it's all forward looking. Yes or no? So historical data is being evaluated for the purposes around, for the purposes to see the future picture. So you can say it's a way of moving forward in terms of getting a glimpse as to how the things are expected to turn out. So when you talk about the past data, now that is where this past data plays an important role. Why? Because if the basis of looking at the future aspects, say future outlook, future projections, to a great extent, what basis is that? The past history. So if that past history has got some issues, observations, so that will also have an impact on the overall analysis, right? Okay, then of course you'll have this discussion on the suggestions, right? Now talking about investigation. See, investigation is quite a familiar term that you come across. In not something that we get to see this quite a lot practically. Why? Because These are again a very specific set of procedures, right? And carried out by some specific organizations. Now, what do you have? So you can say investigation is nothing but a systematic and an in-depth examination of what? Now that of what is similar to what you see in case of diligence. That will depend upon the requirement, who is getting it. Means what is the purpose? Why is this investigation required to be performed? Maybe some fraud has been discovered in the entity. So that's why investigation might be required to check the reasons for the fraud, what are the gaps, and have we really seen the complete picture, or there is something which is still hidden. So that's where you get into the investigation, right? Once again, when you talk about investigation, please don't get confused and please don't think that investigation will only involve the books of accounts. Yes or no? Over here, actually, when you talk about the investigation, it could be in relation to various things. It could be about the books of accounts. It could be about the financial data in the organization. It could also be about the non-financial information. Could be in relation to the processes of the organization. Okay. But yes, a very big difference when it comes to the investigation happens to be what? See, it's quite an in-depth examination. Okay. And that's why the scope over here happens to be quite significantly wide as compared to audit. So when you talk about audit, what do you do actually? See, an audit aims at collection of sufficient appropriate audit evidence to enable the auditor to form a judgment and express an opinion on the financial statements or the other data which is under examination. Yes or no? So this is what you do when it comes to an audit. An investigation requires special in-depth examination, say, of the particular records, particular transactions, with the objective of what? Establishing a part or happening or assessing a particular situation. Yeah. So you can say scope of investigation is quite significant. Now, investigation could be quite centric to a particular item. Now, for an investigation, it's not necessary. Let's suppose if you are talking about the financial investigation, so it's something which will always be looking at, say, the disclosures in the financial statements, policies. No, maybe it's all about the completeness of the books of accounts, right? Whether the books of accounts have been complete or maybe it's focused around, say, only in relation to the revenue of the company. Yeah. So it may vary. So now, let's quickly try to understand about the difference between these two. An investigation aims at establishing a fact or a happening or at assessing a particular situation. Whereas main objective of audit is what? Verify whether the financial statements display a true and fair view of the state of affairs and the working results of an entity. Okay. Scope of investigation may be governed by statute, and at times it can be non-statutory, but generally you find it driven through various statutory requirements. Maybe some of the agencies, maybe under Companies Act, you have this requirement to get a investigation done. But for the audit, the scope is quite standardized, right? See, audit is something which you will see year on year for every company. For the listed companies, you'll see this at times quarter on quarter. To say the review at least quarterly. So you can say after regular intervals, or not really regular intervals. So the periodicity is sort of defined and which will continue. But again, we do not have that aspect in terms of investigation. Why? Because it's for a special purpose. And it's not time bound. It's, let's suppose an investigation has been conducted. Maybe the one who is doing the investigation could be looking at the last 5 years. So last 10 years, last 15 years, may not be a capping to the number of years around it. Yeah. So it is not period driven. Right? Next. Nature. When it comes to investigation, as we have discussed, it's all about a detailed study. Wherein the extent of testing could be anything. Because generally, in case of an investigation, we are just trying to look at something which is missing. When it comes to an audit, we are actually going with an understanding that even though we perform this audit, still something may be missed out. But when you are doing the investigation, you just want to be thorough. At times, you may want to be 100% complete. Huh? Of course, you will not be doing that always, maybe in respect of certain areas. And there's no time bound, unlike audit. So an audit, you'll see you're time bound, but investigation is not time bound. Okay. And as we discussed, audit has this inherent limitation. Why? Because one, the basis is what? Test check. Because it's all about reasonable assurance. So you are not really looking at the absolute assurance. But for investigation, you do not have that inherent limitation. And generally, you will not want to have that. Okay, audit is mainly concerned with prima facie evidence. But investigation will involve conclusive evidence. Okay. I think some of these points that you look at are going to be sort of on the similar principles that we have already talked about. Now, reporting requirements. Now, the entity or maybe the person or the authority or the agency who is getting this investigation done is the one to whom the report is going to be sort of submitted. Okay. Or you can say it's really meant for. And generally, you will not see this document becoming a public document. It's quite restricted in most of the cases. Now, what are going to be the steps involved? Of course, as a first step, you'll have to have the objectives around the scoping part. Once you have that in place, the scoping part, that's when you will get on to the audit planning. Wherein what do? You will get into the procedures, You'll get into various areas to be looked at. What is it that you'll want to check? How do you want to start? Where do you want to look into first? Of course, I'll not say that what are the areas to be looked at in depth and maybe the ones to be ignored. Why? Because it's generally an in depth for each and everything. So generally, you don't have that approach of maybe not looking at the things in an in depth manner. Just an overview is not the you can say something that you'll want to have in respect of an investigation. Okay. Examination and study of various records by reference to appropriate evidence. Yeah, because you'll want to get into the underlying information, supporting documents you'll want to check, analysis you'll do. Here again, a lot of analysis is required, and that's why here again you will see a significant usage of analytical procedures. Particularly where the financial data is in. Yeah. So that's where you see the application of these procedures are quite significant. Why? Because that will always give detailed insights, at least by broadly looking at the numbers. Maybe when you are not going in depth, of course, that's how you want to get into the depth of the things. Yeah. So you can say this is going to be your starting point, the way you will want to start. Then, of course, preparation of a report and drawing up the conclusion. So some of these aspects you will want to then eventually get into. Now, some of the special issues you may have in respect of investigation. Now, what could that be? Whether an investigator is required to undertake a cent% verification approach or whether he can adopt selective. Again, there's no prescribed formula. Yes or no? So it's not about checking everything and then saying that because we have checked everything, that's why it's in depth. No. So that again varies from information to information on the basis of the quality of the information that you have, on the basis of the understanding of the information that you have. The investigator will decide as to whether he will want to follow a selective approach or maybe the approach covering 100%. But if at all the investigator wants this 100% to be done, he can do that. Yeah. Next, something that we have looked at even in case of due diligence. Now here again, I think this will give you a lot of clarity as to how do you differentiate, and is it really a different area? Answer is yes. Why? Because no, you can say it's not preset that the investigator will always go ahead with what is done in the audit. Maybe the financial statements were audited, and for the period for which the audit is completed, a fraud has been discovered, and that's where it's been initiated. So maybe the subject matter could not only be the books of accounts, could not only be the management or the processes involved, but could also be the audit process involved. Yes or no? So a question mark could also be raised on the audit which has been performed. Yeah, so to say that because the audit is performed, so that's why this reliance has to be there. No, that's not going to be the consideration at all. Now, here again, because it's an in-depth, quite significant, so that's why will it require the involvement of experts? Again, this will vary. It's case specific. as and when the investigator will come across something over which the experts are required to be involved, their assistance is required to be involved. That's where you will see this. Otherwise, okay. Some of the matters could have been there because of the disputes or the conflicting claims. Okay, so therein it becomes important as to what are the areas and the scoping part. Why? Because the clarity in terms of the underlying business, the underlying company, the underlying records comes all the more important in such a scenario. Now, investigator should refrain from issuing speculative opinion. And generally, this is something you will come across. See, till the time this entire process is not completed, you don't really know as to whether this intended objective around this setup has been achieved or not. Yes or no? So that's why this is also a very important consideration as far as the investigator is concerned, not to really jump onto the conclusions or maybe the opinions till the time things are not in place. Okay. Whether an investigator can make futuristic statements, even if the appointing authority is willing to obtain a futuristic statement, the investigator should refuse to be futuristic. Okay. Whether to retain the working papers. See, the working paper is something that will demonstrate the work. So if let's suppose you do not have the relevant working papers, you do not have the required documentation, then the question may arise that how do you go and justify later on? Yes or no? As regards the work which is completed, how do you go and justify? It's similar to you see in case of audit. It's similar to what you see in case of say due diligence, say internal audit. Same goes over here. So that's why the documentation has to be there in respect of the process you have looked at, in respect of the process you have followed, the procedures you have say performed. So this documentation working paper again for an investigation will play a very important role, and later on this investigation is something basis which you can say a litigation may have to be initiated on. So how do you really go about it? So that will become the basis, that will become the core. Right? Now, some of the considerations you'll have, of course, understanding the business, understanding the financial numbers involved, say whether it is about P&L, turnover, various types of expenses. Of course, all of these things you'll have to look at. But the way you will evaluate this information, the extent to which you will evaluate this information, and which out of these some of points that we just talked about you will look into or not look into will all be dependent on what? That will all be dependent upon as to the scope which is there. Now, as we discussed, this would be statutory, means it's driven by statute times, or it could be the one which is non-statutory. Though you don't see that very often, but at times you come across that. Now, what could be the statutory one? So something which is driven by the Companies Act, investigation into the affairs of a company, or of the ownership of the company. So when you talk about of the affairs of the company, so it's carried out through the inspector, okay, through an order of the central government. So you look at this section 210 or maybe section 212 requires this to be done through this SFIO. Okay, a lot of times you see this in the news as well, that this company, in respect of their books of accounts, an investigation has been initiated, SFIO has been involved. And so what are those? Those are nothing but these types of investigations, which are all statutory driven. And then you may have these other cases which are covered by section 230. Okay. Now, what could be the non-statutory one? Now, this is not specific, or as such, you don't have the listing, but for your purposes, you can just have this types, which you may get to see at times. So the one which is on behalf of an incoming partner. Why? Because an incoming partner wants to know about the existing partnership firm in respect of various aspects. Now, then say, is it something similar to what you saw in case of due diligence? You can say that to a certain extent, but because we are calling it as an investigation, so that's why it's expected to be more detailed as compared to what you see there, right? And a new partner who is coming over must be making an investment, must be looking at some growth uh, prospect. So that's why this type of investigation may have been performed. Similarly, as regards a company to be acquired, so an investor could be there. Now, because the company, so that's why it's not about the partnership wherein the partner will be involved. It's about the shareholders who are going to be involved. Okay. And for the purposes of making this investment, what would they want to understand? They would want to understand about the valuation of the shares of that particular private company. So it's all going to, you can say, revolve around the valuation of the shares in respect of that company. Right? Next, something that you will do on behalf of bank or financial institution proposing to advance loan. So a significant amount is required to be lent here. And the institution, is the bank or say the other financial institution, want to understand about it as to how is this going to benefit them. Number two, they would also like to be secured in terms of the money has been advanced. So how do they get the security? Only when they understand, say for example, operational efficiency, which has been maybe for example showcased by the company, financial condition of the company, right? So that's where this may have been initiated. You must have understood there are so many reasons, and that's why I'm saying that particularly when you talk about this non-statutory piece, even though we are looking at it from the perspective of the shareholder as the single case scenario, from the partner as the single case scenario, it could again be wide in terms of the process. It's not really limited to one of the process. Yes or no? Right? Now, let me just get on to that working file. Just give me a minute. I'll just share this working file once again. To the investigation of the frauds. So PQR Limited is the company. During the year 26-27, management has discovered fraud, or maybe a fraud is suspected. Now, we are not talking about a statutory authority here. Maybe now the management wants to get it checked. They want to evaluate that. So how do they go about it? What do they do? How do they do? Okay. So you can say that is also one of the areas wherein this investigation may be required, may have to be formed, right? Similarly, if we talk about investigation on behalf of individual or a firm proposing to buy a business. Now, this is one piece which we discussed in case of diligence. Now we are talking about partner, individual, or maybe any entity or any person who is looking to acquire a business here. Now, for this business to be acquired, various considerations might be there. For the, or you can say this prospective buyer will have this. And that's why he may want to get into an in-depth review before really acquiring this. Maybe the interest is there, but only and only when the prospective buyer will be very, very clear around it. That's when he will want to go ahead with this transaction. So instead of getting this diligence done, due diligence, he may get this investigation initiated. Correct? And you may have this investigation in connection with review of profit or the financial forecast. So that again can vary in terms of the scoping. Again, up to the entity as to how do they really want to go about it in terms of the scoping piece that they will have. Clear? Now, see, these are some of the types. Now, for each and every type, you will have detailed set of procedures, detailed requirements, not only in terms of the procedures that you'll do, but also in terms of the planning part, also in terms of the observations. And basis the observation, you may also be required to get into further analysis. Right? Now, talking about this fraud briefly, though we are going to talk about this fraud in greater detail as we move further. So maybe I have this fraud in relation to the financial reporting. Now, what do you mean by that? So the financial statements have been prepared wherein the revenue has been intentionally overstated. So can we say these financial statements are appropriate? Answer is no. And because it's intentionally done, so it's a fraud. Yes or no? Similarly, you may have this fraud in relation to the assets of the company. Okay, say some of the assets of the company have been misappropriated. Say those have been stolen. Very commonly, a term that you see in respect of the cash at times, cash embezzlement. Again, a kind of fraud that you come across. Yeah. So this is basically about the fraud an entity may have, and basis some of these frauds which may have been discovered or which might be suspected. Some of these procedures, particularly when you have this fraud, this procedure is initiated, which is about the investigation. Okay, yeah. So that's where it becomes important. Yeah. Next. Now you may have various examples for this though, but of course we are not getting into each and every situation. This may vary. And for this one related to asset particularly, you can see there are a lot of examples. Huh? So I think we can just quickly look at this chart. There's so many examples you can just think of as to what do you see. Very commonly, if it's something which is in relation to the cash or maybe the bank balances. By cash, we mean to say hard cash as well as the bank balance. Okay, wherein you can say fraudulent transfers. Some of these things might have been initiated. But this may also involve some other assets. Inventory is one area which is quite susceptible to this, or wherein you see this fraud taking place quite often. Particularly for those companies wherein the inventory type and size is such, which is not very significant. So therein, these types of frauds are very commonly observed by the companies. Okay, so if the company now wants to get into the detail around it, so how do they do? What do they do? So that's one aspect one may want to get into, right? And then, of course, you have some discussions around the fraud. But as I told you, fraud is one area over which, anyways, we are going to have a separate and detailed discussion. So that's why we are not really focusing much on the fraud part. And then you talk about this aspects around the fraud as to why this may have been uh, which may have been involved. Okay, now there again you may have various reasons for such type of fraud. Yeah. Now once you are through with this, so that's where you see the investigation report as well, which is generally considered to be quite detailed, and the evaluation of those areas is also found to be quite detailed, right? Because that's the objective actually. Yes or no? That's the objective you will want to see in such a case, right? Next is about the forensic accounting. Now, for the forensic accounting, what do we have? And What do you mean by that? Now, this is one area you can say which is upcoming. It's been few years though, but still it's quite upcoming. You can say this has been evolving quite a lot. This has come up quite a lot, and this is one area wherein you see a lot of involvement of the persons now, or you can say this has been growing quite fast. Okay, now if you talk about this forensic, it means something which is suitable for use in the court of law. Yeah, the word forensic comes from the Latin word forensis, meaning of or before the forum. It is retaining to used in appropriate for court of law or for public discussion or augmentation, relating to the use of science or technology in the investigation and establishment of facts or evidence in a court of law. Now, what do you have in case of forensic? So you can say it's an integration of accounting, auditing, investigative skills, which yield the specialty known as forensic accounting, wherein what you do, you study and interpret the accounting evidence. Yeah, so it involves what? Application of accounting methods to the tracking, collection of forensic evidence. Usually for what? For investigation. Say, for example, prosecution of criminal acts, say embezzlement or fraud. So that's something you will generally see in such a case. Now, let's look at the small example, and then I think you will get some more clarity around it. The company received an anonymous handwritten letter through the mail containing serious death threats against the CEO and his family. The letter indicated to the fact that bodily harm may be inflicted on the children of the CEO unless he took specific action to send a specific amount of cash in currency notes within a specific time period in such a manner where the identity of the receiver was to remain unknown. CEO immediately informed the police regarding who took the letter, envelope it came in for the forensic analysis. Lab undertaking the forensic work examined the paper used, possibility of capturing some fingerprints on the letter envelope, scrutinized the manner in which the writing was done, such as the ink used to find out the nature of the writing implement, deployed the expertise of a handwriting expert to decipher the possibility of the writer. Also, an investigation of possible suspects was done. Various samples were collected for handwriting of their suspects to allow forensic experts to match the handwritings and shortlist the most likely suspect. Yeah, so these are some of the techniques. What do you call it as? A part of the forensic work. Now, when you talk about forensic accounting, so let's take an example here. Accounting officer in the pharma company performs a regular reconciliation between the physical inventory counted in the factory and inventory as calculated by the books and accounts. He takes the opening physical inventory as reconciled last month and adjusting for purchases and sales during the month, along with any production wastage or shrinkage, etc. He calculates the theoretical inventory at the close of the last day of the month. This time he noticed a large discrepancy, and after double checking, figures could not understand why he had a large reconciliation variance. Okay. Let me just show. So I think, yeah, sorry. I think the screen was not shared. Okay, now to identify the reason for the variance, he undertook a review of the quantities of the large inventory items to see if he could identify the variance in kilogram weight terms. He noticed that some large expensive raw inventory items receipts during the month could neither be located in the storeroom or the factory production floor. He tried to trace these receipts to specific production runs to see if they had been used for making the medicine sold during the month. Finally, he reviewed the wastage records to see if these had been discarded due to quality control purposes. Okay. Next. Now, when he received no plausible explanation, he concluded that there is a serious possibility of pilferage of these expensive raw materials and asked the security head to investigate the matter during and after the time of receipt. This investigation led the security people to review the CCTV footage and records during the delivery to identify a few instances of short delivery by the inward people. Okay. Now, this detailed analysis by the accounting officer was an example of some forensic accounting techniques to identify a case of accounting fraud. Clear on this? Right. So this is what you see in case of forensics and what you find in case of forensic accounting. Now you would have understood that when it comes to the forensic accounting, of course, you really can't compare this with audit. Yeah, because over here the approach, the extent, you can say the depth of checking happens to be significantly different from what you will have in case of audit. Yeah. So that's why we shouldn't really be comparing these two. Yeah. So that doesn't really help us. Now, I think we have discussed about some of these terms when it comes to the audit vis-a-vis due diligence, investigation, forensic accounting, right? Now let's try to quickly compare this audit with forensic accounting. Next, quickly, let's look at this, and then eventually we'll move on to some of the questions as well around this. So in case of an audit, what do? Express an opinion as regards the truth and fairness. Yes or no? That's what you will do. But when it comes to the forensic accounting, okay, you want to check around the fraud. Now, when it comes to the techniques, of course, you have this limitation and your approach is quite different. And it's all period driven. Yeah, but for the forensic piece, you do not have the period, you do not have the limitations on the procedures, your approach is quite wide. Yes or no? Now, of course, you can have this different items, but some of the off-balance sheet items may also be included in the scope here. All right. So I think this is it that we had on this. Now we can just talk about some of the questions as well around this. So I think what we can do is before we move on to that part, we can just take a short break, huh? Okay, so let's take a short break now and then we'll continue, right? So I think, Ashok, we can take a break now. Now what we will do is we'll just try to look into some specific questions around it. Okay. So let me just get on to some doc. It's there we go. Let's look at these questions now. Quality Limited is engaged in the business of manufacturing and distribution of various ready to cook products. For example, like vegetables, noodles. Okay. Now, government made some changes in the rules and regulations around the sector. Consequently, the management decided to go for expansion. So, appears it's quite favorable basis which the management has taken this decision. Okay, now management was looking for some financial investor. So they are looking at the funds. So that appears to be the case. So you find the management is looking for financial investor who can fund some part of the proposed expansion. Mr. Aman is interested in this venture and appoints you. Now you are looking at it from the perspective of the investor. Now who is the investor? Mr. Aman. And the investor is engaging, appointing an advisor or a consultant in respect of what? In respect of this proposed investment in the business of Quality Limited. Okay. Why? Because he would like to, first of all, understand whether it's viable or not, this investment. Yes or no? Only then he will go ahead and do this investment. Correct? So you can understand that's going to be the perspective. Now, what is the scope? You have to investigate the audited financial statements. Number one. So broadly, it's about the investigation. You also need to ensure that the valuation of shares of the company on the basis of audited financial statements is appropriate. So you are also required to evaluate the valuation of shares. Okay. What process will be used for checking, and can the reliance be placed on the already audited statement of accounts? Yeah, so over here, basically it's all about the procedures, process, methodology, approach. That is what you are required to comment upon. Yeah, so let's look at this. Now in this case, what do you do? Because the company is engaged in the business of manufacturing, distribution of various ready to cook products, management was looking for some financial investor. Okay, so that's why this has been initiated. So it's not about any fraud which has taken place. So you need to first of all understand the objective. Yes or no? And it's not something which is driven by any statute. Correct? Maybe Mr. Aman wants to be assured about the valuation, wants to be assured that the numbers which he is going to maybe rely upon, yeah, basis which he is going to decide upon whether to invest or not, he wants to have a confidence on that. Yeah. So that's why he would want to get it done through another person, through independent person. Maybe he is not very uh, confident, or he's somehow not getting the confidence through the audited sector. Okay. However, if the investigator has been requested to establish the value of the business or share or the amount of goodwill payable by the incoming partner, ordinarily investigator would be entitled to put reliance on the audited materials. Why? Because his focus is going to be then on the valuation. So he will make the numbers as the basis, assuming the numbers are correct. Okay. Wherein will he really get into the numbers as to whether the numbers are correct or not? No. He will be focusing more on the methodology of valuation as to whether that has been applied by the valuer in an appropriate manner or not. But over here, that's not the case. Now, if the statements of account produced before the investigator were not audited by a qualified accountant, then of course there arises a natural duty to get the figures in accounts properly checked and verified. Of course, for unaudited, you will want to do that. However, when the accounts produced to the investigator have been specifically prepared by a professional accountant who knows or ought to have known that these are prepared for the purposes of investigation, he could accept them as correct, relying on the principle of liability to third parties. It would be prudent to see first that such accounts were prepared with objectivity and that no bias has crept in to give advantage to the person on whose behalf these were prepared. Now that becomes important. That's an essential element here. Okay, clear? Next, CA Rajpal, you can say we are now talking about the forensic accounting requirements. Performing a forensic accounting engagement involves gathering of evidence in relation to suspected fraud. Okay, so fraud has been suspected of substantial amount in a company. He has been appointed under the terms of a contractual agreement with the company. Okay, so appointment and all formalities seem to have been there. So those have been in place. That's the point here. Now, company operates in an electronic environment. Generally, that's something which you'll see across the companies these days. With the technology, the way the technology is advancing, that's a common phenomenon. And this is going to increase quite significantly, going to become more and more sophisticated, particularly when you see this development taking place through AI as well. While performing engagement, his team has gathered evidence from electronic records in the ERP, messages in company's email system, and also from the system logs and the audit trails generated by the company's computer systems. However, while doing so, the team has failed to take care of the aspects such as keeping records of each person in team, gathering relevant evidence, date and collection Okay, so the team has failed to take care of aspects such as keeping records of each person in team, gathering relevant evidence, date and time of collection, storage of such evidence, what implications it may have on the forensic accounting engagement as such. Okay, so that's what you are required to comment upon. So in a forensic accounting engagement, professional undertakes a scrutiny and a detailed examination of all transactions. Yeah, so that's what you will see. And the balances relevant to the mandate so that the evidence gathered is suitable in a court of law, something that we just talked about. Okay, that's basically about the compliance with the legal requirements, where it can be challenged through cross examination by the defending party. Okay, it is important that team is skilled in collecting evidence that can be used in a court case, keeping a clear chain of custody till the evidence is presented in court. If there are gaps in chain of custody, then the evidence may be challenged in court or even become inadmissible. In the given case, team has failed to keep record of matters such as persons gathering relevant evidence, date and time of collection, storage of evidence. Therefore, when you talk about this chain of custody, so you can say it seems to be missing now. Yes or no? So the team has failed to maintain the chain of custody. It can therefore defeat the objective of forensic accounting engagement, as evidence may be challenged in the court of law by the defending parties, and thereby it may become inadmissible. Quite clearly? Yes or no? Yeah, it's quite evident basis the information that we have. Correct? Now, moving on to the next one. C.S. Sanjana is acting as credit manager in a branch of DFC Bank Limited. Okay. A company has approached the branch for a request to sanction credit facilities worth rupees 10 crore for meeting usual. So you can say a company has reached out, say requesting for a loan. As simple as that. It is a prospective new client. So if you look at it from the perspective of bank, for the bank, it's a prospective customer. It's a new client. Why? Because in the past, the bank haven't had any such transactions with this customer. Okay. So therefore, credit manager will get involved. So this loan processing, all of these things, bank will have to do this now. And who will do this exercise for the bank? Of course, the credit manager. Yes or no? No. Credit manager means CS Anjana checks the past history of the company. Okay, so when you talk about the company who has approached, so we are talking about the company, background of the promoters and directors, shareholding pattern, nature of business, assessment of financial results of the past years, and the future projections is also undertaken. That has also been done. Yeah. She also carries out SWOT analysis. Now, important for the bank to evaluate that. Why? Because if they were to sanction a loan, So they need to, of course, assess the recoverability. So no, otherwise, how do they recover? What do they do? Besides, assessment of net worth of directors is also undertaken. Status of CIBIL score, position of name of promoters directors in RBI defaulter list is also verified. So we are actually given certain procedures which have been performed. She also makes discrete inquiries from few clients. So these are a set of, you can say, commonly performed procedures. Okay, what is the objective? Objective is to evaluate the credit worthiness of the company, its promoters, directors. Okay, so that's the objective, to get into such sort of details. Now, based on the above, identify the activity being performed by CA Sanjana and discuss its nature. So now, in this case, actually, the question is trying to ask you that the procedure, approach, some of those things are already given to you. Okay, unlike in the previous questions wherein you were required to comment upon, required to explain what do you do in case of investigation, what do you do in case of forensic. Now some of the procedures are already given. Now you are required to comment upon as to what is it that you will call these procedures or this process as. Okay, so it's other way around. I think comparatively simpler. Yes or no? Would your answer be different if this activity was to be performed by a person not qualified as a chartered accountant? Basically, you also need to comment upon, can a known CA perform such activity? State reason. Name any three other areas where identified activity can be undertaken. Yeah. So let's talk about this one by one. Okay. All of these aspects will touch upon one by one. First, if you look at the set of procedures, you can say it appears to be due diligence. So that's what you will do. So there's no sort of investigation going actually. And you may also not call it as forensic. Why? Because generally you will see this when you have this fraud. So forensic is something which is specific to fraud or the suspected fraud. But investigation, again, quite a few times you will associate to that. Not always, but in most of the cases. Due diligence is something which fits this procedures, or you can say the process or the activities which are performed by sales engineer. And that's where when you say that it's due diligence, you also need to explain why it appears to be a due diligence to you. Yes or no? Just to say that it's due diligence doesn't help, because through the definition of due diligence, you will be able to justify why you consider this to be a due. Okay, so let's understand. It's a measure of prudence activity or assiduity as is properly to be expected from, ordinarily exercised by a reasonable and prudent person under the practical circumstance. Not measured by any absolute standard, but depending upon the relevant facts of the case. It involves a careful study of both financial and non-financial possibilities. Okay. It implies a general duty to take care in any transaction. Due diligence is a process of investigation. You can say it's a kind of investigation, not really the investigation, performed by investors, particularly into the details of a potential investment. such as examination of operations and management and verification of various facts which are involved therein. It entails conducting inquiries for the purpose of timely, sufficient, accurate disclosure of all material statements, information, or documents which may influence the outcome of the transaction. Okay. Due diligence involves a careful study of the financial as well as non-financial possibilities for successful implementation of restructuring plans. Further, due diligence involves an analysis carried out. Basically, it's an analysis before acquiring a controlling interest in a company. Okay, wherein you want to determine that the conditions of the business conform with what has been presented about the target business. Also, due diligence can apply to recommendation for an investment or advancing a loan or a credit, something that you have in this situation. Okay, so that's how you are trying to relate some of these procedures which are given in the question to the concept, or you can say the process which is generally performed in you can say through those procedures. Now, looking at the next part or the next question, you are also required to comment upon this aspect. Would your answer be different if this activity was to be performed by a non-CA? And whether a non-CA can do this or not? Now, when it comes to due diligence, it's not something which is, you can say, reserved activity like statutory audit. No. Okay, because it's not reserved, so therefore it doesn't matter whether it's performed by a CA or not a CA. Right? It is not necessary that due diligence can only be carried out by a chartered accountant. Important thing is what? Whether the process is carried out in a diligent manner the way it was required to be done, and whether the person involved was competent to do that or not. Okay, so that's going to be the most important consideration for such type of evaluation. Then if you look at the next part, so what did it ask? So then you are required to comment upon any three other areas wherein this set of activities, you can say, can be undertaken. So the areas where due diligence may be undertaken. What is that? Corporate restructuring, that's where you will do this. Venture capital financing, that's where you will do this. Public offerings, that's where again you will do this. Yeah. So any three you are just required to comment. Okay. Next, moving on to the next question. During the course of audit of Limca Limited, so it's about the audit which seems to be going on. CA Ranjan observed frequent changes in accounting estimates of receivables, delays in providing information by the management, including the altered documents. So every time, what do you find? Some of the documents they provide, but they added that, or they come up with a new set of information, which is basically the revised information. So it's not about additional one. The previous one is the revised. Okay. He also noticed the discrepancy between companies' records and the external party confirmations. Okay. So there seems to be a disconnect on the basis of the evidences which he has come across. These factors made him suspect possibility of a fraud in the entity. Now, during the course of audit, auditor is thinking an audit, sorry, the entity, maybe some sort of fraud is going on. Okay, now in this case, identify the common indications that may alert an auditor to the existence of fraud, considering the given situation. Also, explain the four elements of fraud, often referred to as fraud diamond. I think something that we just touched upon, we didn't get into the details, so we'll try to be able to understand that better now, right? So let's look at this first part. So actually, if you look at this question, here again you have two parts. So what is the first part? So this is the first part. Common indications that may alert an auditor as regards the fraud. Number two, four elements of fraud. So this is more of a guidance when you talk about this number two. And first one is also more about a guidance. Of course, you should always try to relate that to the specific situation is given, but it's more about the guidance which is required to be covered. So the given situation presents several indications that may alert an auditor to the possible fraud, which include the following. What is the first one? Discrepancies in accounting records. So did you find such discrepancy? Answer is yes. Yes or no? There was a discrepancy. Non-recording of partial recording or incorrect recording, delayed recording, right? That was one problem. Conflicting or missing evidence, missing documents, altered documents, significant unexplained items in reconciliations, something which the entity records explain, and those are differing from external evidence that you obtain. Okay, so this internal versus external evidence, when you find them to be moving in opposite directions. Okay, so that's again something which will indicate. So please remember that these are all indications. Because of these indications, so we should not conclude that, yes, of course, fraud is there for sure. That is again not the point, right? Unacceptable management responses, such as denial of access to records, facilities, employees, undue time pressure to resolve complex issues, unusual delays in providing requested information, denial for use of certain audit techniques, unwillingness to address the identified deficiencies in internal control. Okay. Other one could be accounting policies which are different from what the industry follows. Okay, so even if, let's suppose you talk about the accounting principles, first of all, see, when you talk about the accounting principles, that has to align with the accounting standards. But at times you may see some of the situations could be there which are not covered or which may provide some options. So generally, in such a case, what is it the company will want to do? Company will want to go with the trend. Trend of what the industry is following. Yeah. So why is the company not really going in line with what the industry has been doing? So that could be again a matter of consideration for the auditor. When you see frequent changes in accounting estimates, so of course changes can be there, but the frequency can put a question mark as to why this has been changing every now and then. So is it really a change which has arisen because of the changes in the circumstances or maybe the assumptions? Or is it that the management is intentionally changing them? Maybe just to support the financial information, or maybe just for their internal purposes, or which are not in line with the accounting principles that you will have. Yes or no? Right. So now, next part. Four elements of fraud, those are also required to be discussed. Incentive, opportunity, rationalization, and capability. Now, incentive, see, for a fraud, some incentive has to be there. I have a need to commit fraud. Opportunity. So let's suppose there's a weakness. Controls are not there, controls are not strong. So that is giving an opportunity to the person to go ahead and commit the fraud. Rationalization. Say, I have convinced myself that this fraudulent behavior is worth the risks. And of course, capability has to be there. I have the necessary traits and abilities to be the right person to pull it off. I have recognized this particular fraud opportunity and can turn it into reality. Okay, so these are the four elements you will see. Yeah. All right. So now moving further. All right. So now what we will do is, so quickly, let me just touch upon some of the aspects related to this audit of PSUs as well. Yeah. Then of course, what we will do is we'll just pick up some more questions for both the areas. Jointly, we'll just pick up some of those around the PSUs as well as the topics we just covered once again. Okay. Now, talking about this audit of PSUs. See, PSU is all about the public sector undertaking, something you can say which is government control. So now, so the moment you say it's government controlled, so what will happen? What will happen? You'll have some of the things which are required to be looked at, the way policies and procedures are set by the government. Even though it's specific to the company, you can say it will be driven by what the government will do. So something which you will not find when it comes to, say, a privately owned company. Yes or no? So this is one aspect. Secondly, when you talk about PSUs, because these are government controlled, so generally we are talking about the large size companies. Okay, and of course, the stakes involved are quite significant. So the public interest is also involved there. So you have this segregation of the organization of PSUs. Departmentally managed undertakings could be there, which form part and parcel of government activities. say Indian Railways, postal services, security printing. But that's not a PSU. So that's how you see the entity structured. Then you have the government companies or the government companies. Okay. Then you have the companies which are set up under specific act or legislation. Say for example, UTI. Say for example, LIC. Now, for the government audit, you have this independent constitutional authority, Comptroller and Auditor General of India, CAG, through the Indian Audit and Accounts Department, who will perform the government audit. And then you have some specific provisions in relation to what the CAG is required to do, how the things are required to be set up. Okay. Then, moving further, when you talk about PSUs similarly, now here again, what will happen? It's the CAG who specifies the entities that come under audit purview of CAG at the union and state level. Scope and extent of audit is determined by CAG itself, whether it's the financial compliance or the performance. So it's not only limited to the financial statements. It may always be about different areas. Who will decide that? That is again decided by the CAG. And these are the specifications that you will always have in case of PSUs only. Okay, now, what are those basic elements of PSU audits? One is about the parties involved. Of course, auditor will be their responsible party, and of course, there will be a set of intended users. What is the subject matter criteria and subject matter information? And types of engagements you may have, whether it's an attestation engagement or a direct reporting engagement. So these are the three elements you always need to have in place. So what are the principles? So principles are again similar. You will see in respect of any audit, whether it's about the ethics or the independence requirements, professional judgment, skepticism, quality control. Yeah, so all of those principles happen to be the one which will apply anyways to an audit. Now, as regards the process, see, let me just put it in a slightly different manner. So when you talk about process for an audit, though this is one area that we are anyways going to discuss upon, and we'll pick up some of the auditing standards around it. But quickly, to get an understanding of the process, now please understand, whether it's a PSU or non-PSU, what will happen? Before you start any audit, you will be doing the planning. Now in planning, what do? You will do the risk assessment. What are the risks? Which of those are significant? Which of those are not significant? And what is it you'll do to take care of that? Yes or no? Yeah, so all of these aspects you'll look into. Materiality factor, your audit program, your team, okay, some of the past year issues. What are your procedures for the current year? And in respect of the understanding which you may be carrying, or if it's a new client which you need to obtain, has there been any change in respect of the past year issues? What are the areas that you would want to focus upon if there have been some negative reportings in the past? All of these considerations, will you have that? Yes. So will you do this for a PSU? Of course, yes. Now, basis the planning, what will happen? You will get into the execution. So basically, execution is what? Execution is all about application of the plan in a very simple manner. Can we say that? Yeah. So it's all about what? Application of the plan. So this entire planning which was done. So what did you do? How did you do that? What was the purpose? Purpose was to, of course, apply that. Yes or no? So that's what you will do. And once you're through with this, okay, so you'll draw conclusions. In fact, you will keep concluding for various things. And you will then eventually get onto the report. Means you will report basis this. Yeah. So in a way, we can say both of these will lead to conclusions and the report. Exactly, that's the process. Anyways, you are going to adopt. Anyways, you are going to follow. Now, during the execution process, say a new set of information is something that you come across. So will you want to apply that? Will you want to maybe amend the procedures? Or will you want to evaluate that? Will you want to go back to your planning and maybe replan some of the things, if at all? Do you think that is appropriate? Answer is yes. Answer is yes. So you can say that entire set of this activities, or you can say the approach or the methodology that you will follow for any audit. So principally, will that change when it comes to a PSU? Answer is no. But of course, basis the specifications of a PSU, maybe there are some specific reporting requirements. So will you want to now consider that? Answer is yes. You want to consider that, even you get on with that part as well. Yeah, you may have to maybe additionally cover that part along with something that will always be forming part of your audit planning or the audit strategy or this entire audit approach that you'll follow. Yeah. Okay. So then, of course, you have some other specific aspects related to the PSUs. So what we will now do is we will now get on to the questions. I think with the help of some questions, let me just try to get on to these parts we just discussed. Okay. Now, so what I'm doing is I have just got some specific questions, plus we'll also pick up your RTP. Yeah, so that you can have a clarity of what has been there in the past and what is there in the RTP. So some sort of mixture will pick up. So I'm just using first of all this RTP of January 2026. Okay. And then we'll pick up some more. So let's look at this January 26 RTP and this question around PSUs. The Comptroller and Auditor General of India appointed Sharma and Associates, a firm of chartered accountants, to conduct performance audit of NAL Limited. Now, please remember, they are asking about performance audit. So that's what you need to check first of all, that at times what do you do? You'll just read that very quickly. You'll say, okay, it's CAG, it's PSU. company and you start jumping onto that. You ignore that it's about the performance audit. But generally, what do you think? It's all audit of financial statements. So that's why careful reading becomes important. And some of these things you can always underline. Audit was conducted with the objective of examining whether all the expenses of the units were in conformity with public interest and the accepted customs. So the scoping part is also clarified. Okay, whether expenses of the unit were in conformity with public interest and the accepted customs. However, audit report submitted by the firm was rejected by CAG. Whether action of CAG is justified in the given scenario. Let's look at this. Yeah. So let me just put a solution. See, in the given scenario, CAG appointed Sharma and Associates, a CA firm, to conduct the performance audit. The firm conducted the audit with a view to check all the expenses of the unit were in conformity with public interest and the publicly accepted customs, which is not performance audit. Yes or no? Yeah, clearly. What is a performance audit? So therefore, in the exam, when you say that this is not a performance audit, so how do you explain? You will have to first of all explain what a performance audit is. That's how you will justify your answer. So a performance audit is what? So then you write about the performance audit. That is an objective and systematic examination of evidence for the purpose of providing independent assessment of performance of the government organization, program, activity, function in order to provide information to improve public accountability and facilitate decision making by parties with responsibility to oversee or initiate corrective action. Right? Performance audit in PSUs is conducted by CAG through various subordinate offices of Indian Audit and Accounts Department. And in conducting the performance audit, the subordinate offices are guided by manuals, auditing standards, which are prescribed by CAG. Correct. Therefore, the objectives of performance auditing are evaluation of what? Threes. These are also very commonly referred to as threes. What are those? Economy, efficiency, effectiveness of policy, programs, organization, management. It also promotes accountability by assisting those charged with governance and oversight responsibilities to improve performance, transparency by affording taxpayers, those targeted by government policies and other stakeholders, and insight into the management and outcomes of different government activities. Okay, performance auditing focuses on areas in which it can add value, which have the greatest potential for development. Okay, it provides constructive incentives for the responsible parties to take appropriate action. Now, please understand, over here, you are trying to explain in detail as to what the performance audit is. Yes, so to a great extent, you are not only giving the guidance around the performance auditing. You are also you are also basically trying to justify as to why you're saying it something which was done was not a performance audit. Okay. Regulations on the audit and accounts, which are issued by CAG, lay down that the responsibility for development of measurable objectives and the performance indicators, as also the systems of measurement, rests with government departments or the heads of entities. Okay. They are also required to define intermediate and final outputs and the outcomes in measurable and monitorable terms. Standardize the unit cost of delivery. Benchmark quality of outputs and outcomes. Thus, rejection of audit report submitted by audit firm by CAG is in order. Okay, so now once again, after giving the explanation, basically after giving the justification, you are saying that whether that report is justified. Of course, if something was required to be done, you don't do that, you submit the report for something else. So should that be considered? Answer is no, because that is not what the CAG requested the firm to do. Why? Because audit with a view to merely check the expenses of the unit are in conformity with public interest, public accepted customs. That is not a performance audit in any respect. Okay, clear? Now, moving further. So let's look at the next one. Okay. Yeah, so let's look at the next one. During the course of audit of Limca Limited, C. Ranjan observed frequent changes in accounting estimates of receivables, delays in providing information requested by the management, including altered documents. Yeah, discrepancies. Remember this question? Yeah. So now in this case, identify the common indications that may alert. So the same question you can see is there in your RTP, which is discussed. Clear? Yeah. All right. So now let me just pick up some more questions for our discussion. So just a minute, I'll just move on to some more questions now. Yes, there we go. Yeah, so let's look at this one. During the course of an audit of state government department, office of CAG observed that prescribed law in the state defined a flat based on the following two criteria in a premises. So what was the definition? First, okay, so these criteria are required to be considered for that. First, dwelling units exceeding a threshold limit. Second, buildings with a total area surpassing a threshold limit. However, it was noted during the audit that the relevant database did not include a column for entering the area of the building. Consequently, a certain number of buildings were identified as flats, even though they had fewer dwelling units than the threshold. In the absence of data regarding the area, audit team directed physical verification of these flats. Okay. In the absence of data regarding the area. Physical verification confirmed that these buildings were incorrectly classified as flats, resulting in the department under collecting water charges. Now, you are required to identify the type and nature of audit being performed by CAG. First of all, okay, so there are two parts to this. So that's the first part. Second, to whom report of such audit was likely to have been submitted. Of course, when you will be able to identify the type, nature, you will be able to, of course, explain each and every aspect around it. That's something which is actually required to be done. Okay, so now let's look at this. Yeah. So in the given case, we can say it's a case of compliance audit performed by CAG. So now the question rises, why compliance audit? So in a similar manner, now what we will do, we will explain as to what the compliance audit is all about. So that's where you may find that even though we are trying to link the things to the case scenario, at times your general principles, your general guidance can help you a lot. So each and everything you need not link. Now you will put down the general guidance. Yes or no? That's how you are actually presenting the answer. Compliance audit is the independent assessment of whether a given subject matter is in compliance with applicable criteria. This audit is carried out by assessing whether the activities, financial transactions, and the information comply in all material respects with the regulatory and other rules which govern the audited entity. Compliance auditing is concerned with, first, regularity, means adherence of the subject matter to the formal criteria emanating from relevant laws, regulations, agreements applicable to the entity. Okay, so that's part number 1 to it. Propriety. So one aspect that you will go and check will be the regularity. So it's concerned with, we can say, regularity. Second is propriety. Now, what do you mean by propriety? Observance of general principles governing sound financial management, ethical conduct of public officials. So when you say that regularity is emphasized in compliance auditing, propriety is equally pertinent in the public sector context. Okay. Again, a very important consideration the auditors will have while performing audit of these public sector entities. Okay. Then, under Article 151, audit reports of CAG relating to the accounts of central or the state government should be submitted to President, Governor of the state, who shall cause them to be laid before the Parliament, state legislative assemblies. In the given situation, the report relates to State Department. So then we'll also be talking about your situation. Can't be generic completely till the conclusion. Therefore, in this situation, the report was likely to have been submitted to governor of the state to be laid down, to be laid down before state legislative assembly. Yeah, so that's what you will see, right? Let's look at the next one. Okay, next. Direct benefit transfer is a major reform initiative of the government of India to ensure better and timely delivery of benefits from the government to the people. It marks a paradigm shift in the process of delivering benefits like wage payments, fuel subsidies, fruit grain subsidies directly into the bank accounts of the beneficiaries, removing leakages, enhancing financial inclusion. Okay. The office of CAG is likely to undertake a performance audit for a block of years in a state of some selected security pension schemes and scholarship schemes under direct benefit transfer. Now, in respect of this, okay, what are the likely, you can say, objectives of this performance audit? Number one. Number two, explain the meaning of audit criteria and also discuss how these can be determined in the above case. Yeah. So let's talk about the objectives which are likely to be there in respect of performance audit to be conducted by CAG of some selected social security pension schemes and scholarship schemes in a state. Now, what could those be? First, we can say whether proper planning and process were in place to capture the data of beneficiaries under above schemes. So one. Two, whether necessary steps were taken for implementation of DBT, means direct benefit transfer, like preventing delay in payments to the intended beneficiaries and pilferage and duplication. Okay. Third, whether the infrastructure, organization and management of direct benefit transfer, yeah, whether that was adequate and effective. So that's what you will check. Now, moving on to the next part, you are now required to explain about this audit criteria in relation to what we are discussing. Audit criteria basically is what? We are talking about the standards used to determine whether a program meets or exceeds expectations. So basically it provides a context for understanding the results of audit. Audit criteria are reasonable and attainable standards of performance against which economy, efficiency, effectiveness of programs and activities can be assessed. Okay. Now, in relation to the above mentioned situation, we can say various documents issued by Government of India, state government, for example, circulars that you see, instructions, SOP manuals, guidelines of the schemes. Okay. General management, subject matter literature can be used to determine audit criteria. Understood? So that's how you will determinants. Next, Comptroller and Auditor General means CAG appointed Verma and Associates, a CA firm, to conduct performance audit of MAP Limited, a PSU. Firm conducted the audit with a view to check all expenses of the unit are in conformity with public interest and publicly accepted customs. Audit report submitted by the audit firm was rejected by CAG. Okay, so the similar one we just talked about. Yeah. All right. So look, let's move on to the next one. BT Limited, a company wholly owned by the central government, was disinvested during the previous year. Okay. Resulting in 40% of the shares being held by public. Shares were also listed on BSE. Since the shares were listed, all the listing requirements become applicable. Yeah. All of those LODR, SEBI criteria, all of those things, okay, which will require publication of quarterly results. Yeah, so that's one. Submission of information to BSE. Sam, the FM of the company, is of the opinion, finance manager of the company is of the opinion that now the company is subject to stringent control by BSE and the markets. Therefore, auditing requirements of limited company in a private sector under Companies Act would be applicable to the company, and CAG will not have any role to play. So that's the thought process, right? You are required to comment about this understanding, of course, basis the criteria, basis the guidelines which are required to be evaluated in such a case. Yeah. So let's look at this. So if you look at the Companies Act, a government company has been defined. Now we need to find out what is a government company. So a government company is a company in which not less than 51% of the paid up share capital is held by central government or by any state government or the governments, or partly by central and partly by one or more state governments, and includes a company which is a subsidiary of a government company. So you can see this is the criteria, correct? So that's how you will look at as to whether a company is a government company or not. Yes or no? Now, for the situation that we have, auditors of these government companies, they are the firms. Basically, appointed by whom? CAG. Who gives the auditor directions on the manner in which the audit should be conducted by them. Yeah, because if CAG is appointing, so CAG will tell you what to do. Yes or no? Listing of the company's shares on the stock exchange is irrelevant for this purpose. So can we say that if a company is meeting the criteria of a government company and this company gets listed, so it will not remain a government company anymore? Answer is no. Of course, some more rules and regulations will become applicable. There's no doubt about it. But does it bring this company out of the purview of CAG? Till the time it continues to remain a government company, that will not be the case. Okay. Yeah. So therefore, in the given situation, the thought process of Sam, will that be considered to be appropriate? Answer is no. That's not correct. Okay. Yeah. Next, let's look at this next one now. TBH and associates. So now we are talking about the auditors basically. So they are the statutory auditors of MBPC Limited. So you can say MBPC is a PSU. It's been given. It's a PSU in the power sector. It is engaged in constructing large size thermal power stations to accelerate development of power sector in the country. So that's the objective. Now, one of the financial committees of parliament has decided to examine its physical and financial performance. Okay. It has also examined the audit findings of CAG, in respect of which action is yet to be taken by the said PSU. Committee also proposes to include in its report performance of the company in various operational matters. So which financial committee of the parliament you think deals with such matters? And of course, what are going to be the functions of that committee? Yeah. So now, the said matters which have been covered, they are dealt by whom? They are dealt with by Committee on Public Undertakings. So that's the committee which will deal with this. And what are the functions of this committee? Now you're required to give the guideline basically. Yeah? So it's all about the guidance. Yes or no? To examine the reports, accounts of public undertakings, to examine the reports of CAG on public undertakings, to examine autonomy and efficiency of public undertakings, and to see whether they are being managed in accordance with sound business principles and prudent commercial practices. To exercise such other functions vested in the PSC and the estimates committee as are not covered above and as may be allotted by the speaker from time to time. Okay. Yeah. So that's what you'll do. Examination of public enterprises by the committee takes the form of comprehensive appraisal or evaluation of performance of the undertaking. It involves thorough examination, including evaluation of policies, programs, financial working of the undertaking. Clear? Yeah. All right. So let's look at one more. Okay. So yeah. So let's look at this one now. CAG has appointed chartered accountant firm to conduct comprehensive audit of Saras Company Limited. And what is the audit? Comprehensive audit. Now, what is this comprehensive audit? We don't know. We'll have to check. Saras Company Limited is a listed company. Is listed on the stock exchange. It handles major railway project of metropolitan city, okay, for the period ended 31st March 24. Work to be conducted under Project A, handled by Saras Company Limited, was of laying down railway line of 130 kilometers. So that's the work. Laying down railway line of 130 kilometers. Okay. During the audit, firm reviewed the internal audit report and observed the shortcoming reported about the performance of Project A regarding understatement of current liabilities, capital work in progress by 75 crore. Now, in this case, what key aspects should the CA firm focus on while conducting the comprehensive audit? So now basically you are required to comment upon this key consideration, considering the matter. Now please remember what is the matter. Firm reviewed internal audit report. Okay, so basically internal audit is going on and observed the shortcoming reported by performance. So who reported this? Internal auditor. Okay, so that is going to be considered by them effectively. So you're saying that they are making the use of what the internal auditor has done. Remember the last session? So you can say basically they are leveraging upon something which is already done. So does it mean that the statutory auditor will not be doing this further? No, they will be doing that. But they can always use that. Yeah. So to a certain extent, getting onto this conclusion, getting onto the procedure through which they will reach this conclusion is already covered. Next. The CA firm has been appointed to conduct comprehensive audit, and this firm has observed shortcomings, as has been mentioned. Now, matters to be undertaken. First, how does the overall cost of capital of the project compare with the approved planned cost? Yes or no? Were there any substantial increases? If so, what are these? Whether there is evidence of extravagance or unnecessary expenditure, means to a certain extent, propriety annual is also covered there. Have the accepted production or operational output been achieved? So performance or the operational aspects are being considered. Has the planned rate of return been achieved? Are the systems of project formulation and execution sound? Do they have some inadequacies? Okay. Are the control measures adequate, or there are inefficiencies, wastages in raw materials? Are the purchase policies adequate, or have they led to piling up of inventory? Yeah, so this is again, so basically it's all about the policies, procedures, operational aspects which are required to be evaluated. Does the enterprise have R&D programs? Okay. What has been the performance in adopting new processes? Means, does it really result in cost reduction or not? Do they have adequate system of repair and maintenance? Are the procedures effective and economical? Is there any poor or inefficient project planning? Yeah. So these are some of the considerations, or you can say some of the key considerations you will have. Okay. So with this, we are through in terms of our discussion for today, and we can just close this discussion now. So thanks everyone. Ashok, we can close.